Oh, Liz, you
Oh,
started the recording, is that correct?
yes, I did.
Okay, thank you. Make sure that we actually talk about that and make sure that that's correct, that's done.
We have a habit of forgetting to turn on the recording here.
And
So,
thinking each other has done it.
hi, Eamon. Eamon is also joining us from our team today. So we want to jump in and get started because we have lots of time that we want to fill with questions and that sort of thing. So welcome everyone to our first speaker series session. And we are going to be starting these every Friday for the foreseeable future. Is everyone seeing red here?
Uh-oh. That's not a good sign. Not a
That's
good
not a
sign.
good sign. Does anyone know how to get rid of the red? Would that be on my screen?
Yes, probably.
Oh, okay. Well, let me stop sharing for a moment and let me come right back in a moment. Please stand by. Technical difficulties.
No worries. I'll probably have some of my own. So,
All right. How's that?
We don't see anything yet. Oh, better. Thank you. Perfect.
Better? We're back. Okay. Thank you. I see some nodding heads. Thank you. Well, a webinar isn't a webinar without some technical difficulties, hey? All right. So many of you might be new today. My name is Liz McCrae. I'm a co-founder of Village Wealth, and we're thrilled to have Roman Beylin here with us today, founder of DueDilo, and he is going to jump in momentarily. But I do have a few slides to go over just to get you guys up to speed on who we are and what we do at Village if you're new. So we are a deal management platform that is exclusively built for buyers in the lower middle market, and we are home to many first-time searchers. So if you are actively searching for a business to buy on our platform, you can search for deals, track your activity, evaluate those deals with AI embedded in our platform, and start to do your financial modeling to understand if the deals that you're looking at are bankable. We have over 40,000 listings in our marketplace across North America. You have a customized dashboard that you can build on the deals that you are evaluating and track all of your activity, which opens up the AI analysis tools within our platform where you can begin to work on scenarios around deal structuring and use the financing calculators to understand, is this deal that you're looking at bankable and move it through the rest of the process. We are a small but mighty team. We were founded in 2020, so we are in our sixth year and lots of development yet to come. And we're very excited to be pursuing this path of just helping more people get through the search and acquisition process. If you're an advisor or you're an ecosystem partner, we partner and work with ETA accelerators and incubators. We work with search communities, lenders, and of course, brokers and M&A advisors who access our proprietary marketplace and where you can access our community of buyers that are using our system. So we've got a built-in marketplace as well as marketplace aggregators. So that's how we get our deal flow in the system. If you're interested in more information about Village Wealth, on Wednesday, the first Wednesday of every month, Sarah, who's here with me from our team, does an intro to Village Wealth, where she talks about the early stages of your search and also the tooling that's available on Village Wealth. Next Friday, our speakers coming in are from Proc Search Capital. They are a co-investment group that backs self-funded searchers, and we're really excited to hear more about the terms and what they're seeing in the investment space. If you scan this QR code, you'll get to our Eventbrite page where you can see a handful of the next Friday sessions. So if you want to be following all of our speaker series, you can access it through that QR code. And And lastly, we are offering a 2-week free trial for our premium subscription. So if you're curious about the Village Wealth software and you want to jump in and do a trial run of our subscription, that gives you full access to the marketplaces. You get daily notifications of any new deals that come up in the marketplaces. We do weekly open office hours where you can come on and ask your own questions about buying businesses, and you get full access to our deal management software, which is normally $99 a month. So if you want to take a test drive and try it out, there's the QR code to jump in. All right. So today, feel free, just a bit of housekeeping items. Feel free to introduce yourself in the chat. Let us know where you're tuning in from and what brought you here. If you're an advisor, let us know. If you're searching, you can throw in your search criteria if you'd like. You never know who's going to be in the room with us. And I'm going to let Roman introduce himself, and then he's going to do a short presentation. And then we do ask, the presentation is really short. Like Roman said, 10 to 15 minutes. So if you can please hold your questions until the end, and then we can open it up and just pepper him with everything else. So with that, I'm going to stop sharing my screen and pass it over to you, Roman.
And I will
Awesome.
just
Well,
say, just before you get started, Roman, I will just say for the rest of the crowd that we are recording today. So that's just a little heads up for any of our audience. And without further ado, Roman, please go ahead.
cool. Well, I do have an about me slide, so maybe I'll just kind of start the presentation, and we can go from there. Does that sound good? I'll
Sounds
say
great.
yes. Cool. Okay, let's see here. Allow. One second. I apologize for any technical difficulties. I'm sure I'm going to have a lot.
Can't have more than me. Like the red
Uh,
on the screen that was a new one.
okay. Can you see my screen?
Not yet.
Not yet. Okay. One second. Let me try that again.
There we go.
Dean, South
Noise.
Africa is the first. Welcome.
Haha. All right. Let me do this. Sorry, one second. Okay, I think we are good, right? Cool, easy enough. All right. So, first, thank you, Liz, for having me here. Awesome to present. Today, it's really about the basics of due diligence, what you should focus on, how much you should be spending, and really how to spend wisely. I'm going to move through this presentation rather quickly. There's about, I think, 22 slides. Most of the value you're going to get from the Q&A. But this presentation will be available. I'm happy to send it out. I'm sure Liz is going to be able to send it out to you as well. So first, a little bit about me. Background, finance and entrepreneurship, did investment banking, did equity research, started a few businesses, failed a lot. Some have been successful. I've also bought and sold a couple of businesses. So I'm a practitioner as well. So I've been in the space. Probably what's most relevant is I am the founder of DueDilo. We're a curated marketplace for M&A services. We have over 200 vendors on the platform. I launched it in 2021. I've seen over 600 transactions over that period. So that's what I'm talking about is really based on that experience. I'm not an M&A advisor. I want to make that clear. I'm not a due diligence professional. I'm only talking about what I know based on my experience. So this is just for educational purposes. I'm not an attorney. All right, that out of the way. Okay, so first, the basics. What is due diligence, right? Really, it's verification and it's risk management. A lot of people come to me and they think that if a business passes due diligence, that means that it's going to be automatically successful. But that's not the case. That's not how it works. Due diligence is not a guarantee of success. It's also not a single checklist. Every deal is different. Every buyer is different. It's not a one size fits all thing. So keep that in mind. Okay, why is due diligence important? So this is super timely. Axial actually released this data, I think on Tuesday. And they looked in 2025. Why were deals broken? after an LOI has been signed? Well, 46% of deals fell apart due to adverse findings during due diligence. About 25% of that is for non-financial due diligence, so things like operations, technology, benefits, insurance, and all that. But then 21% fell apart during financial due diligence. So this is really why it's important. Uh, the main question I get asked, or I guess the first question I get asked is, what should I focus on? Because, the due diligence menu looks like, Cheesecake Factory. You have a lot of options. There are certain items that are always required, other items that are very common, and then others that are just situational. Always required, of course, financial and legal. Those are probably the most prevalent projects that we see on DueDilo, because every deal requires them. But then you have other items that really depend on the business buyer, the business seller, and the business model. So how do you choose, right? How do you choose what to focus on? Well, first, ask these questions. And this is really basic. How does this business really make money? Where could it break? And what would scare a lender or investor? Really, like, what am I comfortable with in this business? And this is a good mental model to use, right? There's always a cost versus benefit. The menu is quite large, and you can spend a lot of money on due diligence. But if a due diligence item can't change the price, or can't change the deal structure, or can't really change your decision to pursue it, maybe it's not that important. Really question the spend. Of course, industry context matters a lot. A SaaS business is going to have very different dynamics compared to a plumbing business, and the areas that you should focus on are going to be different. So, due diligence really should correspond to the business model. The second most important question I get asked is, well, how much is this going to cost me? Right? That's important, because you need to figure out how much to budget. Well, first, let's talk about kind of the main drivers of due diligence costs. So, first, it's important to keep in mind costs really go up with complexity. Things like deal size, even though it's a little bit counterintuitive, but it doesn't matter. Whether you're buying a $300,000 business, $500,000 business, $1.5 million business, $2 million business, you're going to be spending the same amount of money. It does not matter. What matters is project scope, right? Specific deliverables. What do you expect the vendor to do as part of the due diligence engagement? What's the use case? Quality for the information. Are the financials clean? Are the financials messy? A lot of times when you talk to maybe a seller who's a little bit older, a lot of their financials could be in Excel. That's going to take more work. It's going to be more expensive to diligence that business. Complexity of the business, right? Number of entities, contracts, transactions, employees, business model. Due diligence on a construction business is going to be much more expensive than due diligence on a SaaS. Different business models. One is easy, someone just pays you. Construction, hard. How much of the project has been completed? A lot of different accounting kind of ideas come into that. And obviously, it matters who you hire, right? You can hire a large firm, boutique firm, independent professional. You can hire onshore, offshore. That all matters. All right, so let's get into some specifics. And again, I don't set the prices. We're a marketplace. This is strictly based on what I have seen over the last, 5 or so years, over 600 projects. This is for financial due diligence. The most requested type of financial due diligence I see is for a light scope quality of earnings report. That's most appropriate for a typical search or deal. There's some SBA financing. The books are probably in QuickBooks. Everything, taxes have been filed. Things are relatively clean. And realistically, you can spend anywhere between 6 to 12,000 on financial due diligence. That's really where most projects come at. And keep in mind, all of this is really for deals that are under 5 million. If it's going to be a larger transaction, it'll probably have more complexity. You're probably going to be spending a little bit more. Next, legal services. That's the other piece that every transaction requires. Typical legal fees for a transaction, 12 to 20,000. That's all in. That's starting with reviewing the LOI to due diligence, negotiating the purchase agreement, and any other contracts that might be needed, and then closing. Uh, 12 to 20K is kind of what you can expect to spend if you hire independent attorney or a small firm. Obviously, if you hire a regional firm, it's going to be many multiples of that. Next, technology. So this is another pretty common one. If you're buying a SaaS business, if you're buying a manufacturing business, there's a technology component to it. So it's expensive. Technology due diligence is expensive. Typically, comes in between $5,000 and $15,000. If cybersecurity due diligence is involved, the costs can go up quite significantly. Then there's other due diligence areas. These are all situational. Background checks, market research, benefits, insurance. I'm not going to go into all of them. You'll have this presentation later. You can take a look. All right. So some of the trends that I'm seeing. There's the diligence is more and more important. The chart on the see on the right is again from that Axial report that came out this week, and it looks at 2023, 2024, and 2025. And if you just look at the top two kind of items, you can see that in 2025, due diligence just had a much bigger impact compared to any other year. So again, due diligence is important. There's a lot of new due diligence vendors entering the space, especially independent professionals. This is good. I think overall, this does bring down cost as there's more vendors, there's more competition for your dollars. This does bring down cost. But as there is a wider delta in the cost, there's also a wider delta in quality. So something to keep in mind. Some of the challenges that you're going to see. So the biggest challenge is really aligning the needs with the target business and your budget, managing your time effectively, finding reliable and competent vendors, and controlling costs. And a little bit of self-promotion. That's really why I started DueDilo, right? So that's what we do. We're a marketplace. You can hire highly vetted M&A service providers. We're free to use. It doesn't cost you anything. We get paid by the vendors. Basically, you submit your project, get proposals, and then you hire a vendor. Super simple. Clients love us. We have good reviews, and that's about it for me. Here's some links and ways to get in touch with me. So I will stop I guess I can keep the share just in case we need to go back to the slide, but maybe we can take some questions.
Thanks, Roman.
Yeah.
We do have a question in the chat just asking, and Corey, I see you have got your hand up. I will get to you in 1 second. The prices you quoted for those services are obviously in US dollars. You are in
They
Florida,
are.
totally understood. Does anybody have a understanding of what those would cost in Canada? There are part of our audience is Canadian here too, and are wondering.
My math is not that good to do the conversion rate in my head. It's going to be pretty similar.
Conversion is 1.4. What it
not.
costs here is completely a different question. Eamon, do you have any clue on this one? Or there's some advisors on this call too, that I'm also wondering if they might have an answer to that.
I can speak to it as well, Sarah.
Go ahead, Liz.
Eamon,
Sorry.
Eamon, if you want to jump in as well, you're welcome to. Yeah, these would be probably likely on the small end in Canada, on the low end, but it also depends on whether it's a share purchase or stock purchase or an asset purchase. So asset purchases tend to be a little bit lighter on the diligence, the legal diligence in Canada. And and then it depends on the scope. So obviously the deeper you want to dig and get verification and comfort around certain items, if a company has a ton of employees and they all have different employment agreements and you really want to dig into all of those employment agreements, it stretches the scope. So this would, yeah, essentially this would be on the low end, but you can get it for these costs. But again, you're kind of in control of the scope, and that's something too. Like Roman, I'm curious on your perspective is how do you manage those relationships so that you don't get scope creep or that the advisor might not, run away with things without your knowing, because sometimes we've seen, the cost of services escalate without the purchaser knowing.
Yeah, it really depends on what part of due diligence we're talking about. If we're talking about, purely financial due diligence, honestly, at this point, ask to see a sample deliverable, and financial quality of earnings, P&L verification. It's pretty. A lot of it is standardized, or at least modular, where you can figure out, what to put in, what to put out. So you should agree to this ahead of time. That's the biggest thing. Is just having clear communication. Not Don't leave it up to the due diligence vendor to tell you what they're doing in the middle of it. Have a clear conversation up front about what your goals are, and really what your main concerns are, and then ask them when you're interviewing the vendor, okay, what have you seen from when you've done diligence on these types of businesses? What are the things that maybe I'm not asking, right? So I think that's the biggest thing: communication, clear communication, and clear understanding of, upfront what they're going to be doing.
Yeah,
Speaking of upfront,
I get that.
Roman, we have a question in the chat. Are you seeing an increased use of sell side market due diligence before going out to market?
Honestly, I haven't seen that in the last couple of years. Uh, it would be nice if there would be, but I haven't seen that on my end, or at least in the U.S., I should say. Truthfully, most of my clients are U.S. based, so
Mhm.
maybe it's a little bit different for the Canadian market, but in the U.S., I just haven't seen that.
Yeah, I would say in the Canadian market, I'd second that, Roman. I would agree. I would say what I think we are seeing across both markets is if there is increased due diligence on the sell side, it's being done by the M&A firms and the brokerages themselves because they understand that I want to find it first. If there's gonna be something that comes up, I want to find it first. So it tends to be the sophistication of the sell side advisor because they want to overcome those hurdles before going to market. So we are seeing that, especially with the use of AI and things like that, the more tooling that comes out for due diligence that the M&A advisors have access to, I think we'll
Yeah,
see them finding things earlier before in their pre-staging phase.
yeah. I would also think it depends on the deal size. Sub 3 million, I really don't see sell side QVs. I think when you get higher, 10, 15, $20 million transactions, sure, that's when it makes sense.
Yeah.
There's a question here asking if we could please discuss reasonable expectations around IP review. Example, an attorney to review IP attorney to review the enforceability of patents.
Uh, the question around cost, or what's like what's the question?
It says to discuss reasonable expectations. If the person who, maybe I'll jump to the next question, and if the person who
Yeah,
could, oh,
so
like,
I asked
oh,
that.
go
Yeah,
ahead. Sorry.
Yeah, yeah.
a little bit around cost as well as timeline. Excuse me.
I think it depends on the business and the IP, right? It's hard for me to give you an exact answer. It really depends, right? Because you have to research the IP. There's a lot of things involved. It can get expensive, but it really depends on individual kind of individual deals. It's hard for me to give you like a blanket statement of, hey, it's going to cost, yeah, X, X or Y.
Um, how do you time the initiation of due diligence spend during searches? What check marks are you looking for to comfortably starting the DD spending?
Well, this is something you can negotiate with a vendor, but typically what I see is that a vendor will request a retainer, so maybe 10 to 20% of the overall fee, and then the remainder upon delivery of the findings. Um, I don't know. Does that answer the question? Is that what it's around, or maybe I'm misunderstanding it?
If I was to paraphrase the question, I wonder, like another end for the question poser, please jump in if I'm inaccurate here,
Yeah.
but is there like any recommendations for like staging where you start to manage the cost? Because if there's going to be like any major findings, like where do you start to focus so you find those first and you can manage those before you end up spending too much further down the line? Like, what can you focus on first? Is
Yeah, I would say, first, the first thing you do is you hire an attorney, usually, an attorney to review the LOI and then represent you during the full transaction. Attorneys typically charge hourly, so the spend there is a little bit easier to kind of manage. Then comes financial due diligence once you're under LOI. Financial due diligence is typically a fixed cost, so it's not an hourly rate. So once you end up under LOI, that's kind of when you start. Is that the question?
I
is
think that answers the question.
Yeah,
Yeah,
And
that
if
was.
that
Thank you.
yeah.
perfect. Thanks for chiming in there. Sarah, you had sent me a message on Roman. Did you have any perspective on the difference in diligence costs for asset versus stock share purchases?
It's pretty close. From what I've seen, there's not a huge difference. The legal fees, maybe I don't know, 5 to 10% difference in costs, but nothing that's gonna really significantly impact from what I've seen.
And if somebody wants to
Yeah.
talk about the differences, benefits, and otherwise about an asset versus share purchase, we're happy to do that here at Village Wealth. It is outside of the scope of what we're talking about today, typically. But certainly we can provide you that information if you want to send Liz or I or Eamon a quick email.
We are going to be running a session on that,
Oh, great.
another Friday session, because we'll have one of our lawyers join us for that topic specifically. Yeah, so stay tuned on that one.
Excellent. I think probably this is also a good time to mention that all of the advisors in this space would recommend that your lawyer has M&A experience. Roman, you're laughing,
Yes.
but I'm just making sure we
Yes.
put it out there.
Yes. 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 Yeah. Don't hire your trust and estate attorney for the M&A. Yeah,
Yes.
for sure. For sure. Uh,
Um, Here's another
yeah.
question. Or did you want to finish that thought, Roman? Sorry.
Yeah. I mean, I would say, whenever you are talking to a potential vendor, make sure that they have M&A experience, right? So not everyone's going to have that. Just because someone's a CPA doesn't mean that they can do the type of due diligence that's required for an M&A transaction. Make sure that they have experience with your deal size. Because if someone just came from Deloitte and they're very familiar with, Coke acquiring Pepsi, is a very different type of due diligence than dealing with a $2 million deal, a single seller, and messy financials, right? And make sure they have experience in your industry. That's also very, very important. If someone, all they do is a diligence of online businesses, they're probably not going to be a great fit to help you with your due diligence of a, B2B services business or a laundromat. So those are just some of the things to keep in mind.
Yeah, good point for sure. And now there are a few questions here in the chat. This one says, when the seller is also the owner of the building where the business is operating out of, at what point of DD is a good time to start talking about the lease agreement?
The earlier, the better. I would say even during the LOI stage, the earlier you have that outlined, the better. The last thing you want is any surprises, right? Coming up during due diligence or during closing. That's why I think the better you are communicating with a business broker and hopefully then with the business seller, the better. So That's my only kind of recommendation there. Start those
Mhm.
conversations early about the sale leaseback and also about working capital. That's I hear so many stories about, hey, yeah, we've got to the diligence, everything's good, we paid for it, and the sellers having cold feet about working capital because they equate it to their, the business, yeah, the business price. You want to have those conversations early.
Yeah,
We just had
absolutely.
a situation where there was a leaseback situation and vendor owned the building and they, before LOI, the purchaser and seller had negotiated the lease terms and then the lawyer was not involved in those conversations. And then when they were working on the definitive purchase agreement, the lawyer got involved and recommended changing those lease terms, and it killed the deal because it
Yeah,
happened again later on, and reignited that conversation. And now the financial metrics didn't work for the acquisition. So
yeah,
um, yeah, early on.
early, yeah, yeah. So many people deal with this. Really, yeah. Have these conversations early.
Absolutely. Um, Liz, maybe this is you, because this is talking about platform. How does your platform handle diligence on intangible assets like IP quality, trade secrets, technical debt, or key person dependency, areas that are hard to quantify but critical to acquisitions? I don't know
I'm
if
gonna
Uh,
it's
pass that
Liz
back to
or
Roman.
Roman.
Yeah, I'm gonna pass that one to Roman because we're Village is less involved in the diligence process, so this is for Roman for sure.
Yeah, no, I'll also I'll pass it off because our platform is simply for hiring vendors. So we're not a due diligence firm. We're not a due diligence company. So what you can do on our platform is hire someone that can help you perform this type of due diligence. So yeah.
I think that, yeah, and that's one of the things is like because that diligence is very unique. And so like, trying to find someone on your own that might have that diligence expertise, it's worth checking, with DueDilio to see do they have someone in that industry who can focus in on those diligence items, and it'll save you a lot of time just trying to find that advisor, and help you get some quotes on those pieces
Mhm.
for sure.
Yeah.
That's one of the reasons that we have partnered with DueDilio is because, we get asked for a lot of referrals and recommendations to advisors, and for us to vet all the advisors and try and find advisors for every other industry that has nuances where it can support searchers. We felt, with Roman already having a lot of those relationships, and his hundreds of vendors in his system, he can dial in on, okay, you're in this business, in this size, in this region. We've got someone who can focus in and give you that scale. Or even like Roman, I would assume that a lot of your
Mhm.
vendors can work remotely, so it doesn't matter where they are. They can, if they've got it's more of the industry expertise, not the geographic location of that advisor.
Yeah, geographic location matters very little unless, well, two things. For legal services, unless you're in a regulated industry, so if you're buying alcohol, tobacco, firearms, right, you probably need an attorney that's local that knows the local regulations. Outside of that, yeah, it doesn't matter. I would recommend hiring an attorney based in Vermont for your transaction because it's going to be, well, if you're in the US, it's going to be way cheaper than hiring an attorney in New York or California. So, um, our vendors are based throughout the world. I'd say probably 90% of them are in North America, but the other 10% are in Asia, Middle East, Africa, Europe. So we have them all over the globe, and especially for things like financial due diligence, location matters very little. Of course, if you need someone to inspect equipment, if you're buying a CNC shop or transportation, sure, you want local. But otherwise, it really doesn't matter.
I'm going to ask this question, but I think it might be outside of the scope of this presentation, but let's just see. Typically, it is better to do APA, but if there is regulatory registration on the old company, does the complexity to get new transfer warrant going for an SPA instead?
No idea.
No idea.
No
Liz?
clue.
Like there's a lot of we definitely need to run a session on this with the lawyer. Eamon, I welcome your opinion on this because Eamon is on our advisory team and we come in kind of pre-LOI as well. Um, but we certainly need to cover this is there's a lot of reasons to when you're determining whether to do an asset purchase or a stock purchase. There's it's not just one reason why you might do one versus the other. It has to do with tax, agreements, legally agreements, structure of the company. There would be many reasons why to do one versus the other. And we do see, I think I don't know, your opinion would be interested on this, Roman. I feel like it's a common saying to say purchasers prefer asset purchasers and vendors prefer stock purchases. But we see a tremendous amount of stock purchases. Um, do you have an opinion on that, Roman?
Um,
From
I
what
don't
you
have an opinion, but I see more assets. I
do
said more,
you?
yeah, a lot more asset purchases. Yeah.
Yeah, I think that's a difference between Canada and the US largely. I think it biases more towards the share purchases because we've got the capital gains exemption, whereas the US doesn't.
Mm-hmm.
That would be the difference. Yeah. So if you haven't picked up, we have Canadian audience members and we have American audience members here
Yeah.
today. So that's why we're kind of jumping borders a little bit here and there.
Yeah. Yeah.
Um, Another platform question here. Can the platform handle real estate transactions in an M&A deal?
Well, it depends. If you're looking for an attorney that can handle real estate, yes, for sure. If you are looking for like an environmental, to find a vendor for an environmental review, that's one of those items that probably requires a very local expertise. So we don't have, an environmental firm in every single U.S. state or Canadian province. So probably going to be a little bit less helpful there, but I can point you in the right direction. I've had these types of questions before, so I do have a list of firms I can recommend. Does that help?
Yeah, I think so.
I think so. I've
Mhm.
heard I've heard from an appraisal company recently that they are actually like tr previous to, technology being more readily available, they had to be more physically present, but they actually said that they're able to do appraisals remotely now. So, companies that are a little bit more innovative, for an environmental and a real estate, but for equipment appraisals, we're seeing
Yeah.
some
Mhm.
different
Yeah, for equipment
approaches.
appraisals, all you need is an asset list and if possible, maintenance records. Yeah, 100%. Um, I agree. But for environmental, you want
Environmental.
someone local. Yeah, I don't think you can do that. I think there's a company working on it,
Remote.
but you can't do it remotely yet.
Not yet.
Not yet. Not yet. Yeah.
Here's an interesting question. Does the name recognition of your advisors, like your lawyer and accountant, make any difference in the deal? Does it signal that the seller or broker that you're serious and like they can't pull a fast one on you?
Yeah, that's a great question. Most of the time, it actually matters more in how the deal is financed. If you have investors, they probably are going to be less comfortable with a John Anonymous doing your QV versus, I don't know, someone who is out there. So that's, I would say that's the biggest difference. To a seller or buyer, seller or broker, I have not seen an issue where that mattered, personally. So no, I don't think it matters.
I have a follow-on question to that for you, Roman. Do you feel like it matters if the other side has a big firm and you're dealing with more of a boutique firm? Do you kind of want your representation to match the sophistication of the other side?
That's a good question. Yeah, I think the same answer. I have not seen an instance where that really mattered. I think if you the larger firm you hire, the more established, the higher your costs are going to be. So, always keep that in mind. Um, I've not seen a situation where, an independent attorney or a small boutique firm couldn't negotiate a deal against a regional or mid-sized firm. Um,
I guess it's more based on their
yeah, I
experience.
don't
If they're a
know.
junior or, has less experience versus there's small boutique
Yeah,
firms that they came from large firms and, decades of experience. Yes.
exactly. Yeah,
Yeah.
I think that's fair.
Staying on this same kind of topic, what's your go-to questions to vet advisors?
Well, we do have we have a vetting process. So it involves an application. It involves a face-to-face interview. We review their past work. So seeing relevant past work is very important. That means that if someone's applying to our platform to be a valuation specialist, we want to see valuation reports that they've done previously. If they give us something else, that doesn't count. So we review the past work. We also try to speak with at least two or three past clients whenever possible. We also do a basic online background check just to make sure there's nothing derogatory. And we've honestly, we've had a couple of instances where, like, a CPA or an attorney would apply to join, and just a basic Google search would pull up some, court records that they were like disbarred or the CPA license was taken away. And
Oh, wow.
so that has happened. Lastly, we also have a one strike policy. So even if there's one legitimate, and I want to stress legitimate, negative review about a vendor, we remove them from our platform. That has happened three times over the last 5 years. Not for bad work, just bad communication. But it has happened.
And when someone comes to you with a proposal or a need, do they get matched with multiple advisors and then they choose from those advisors?
Yeah, so typically what happens is a client will come to us, and first, a lot of people, they just want to speak to us about, hey, they talk about the deal, get our opinion about what type of due diligence or what type of support is available and how much they can expect to spend on it. After we've kind of outlined their needs and project scope and budget, then I collect proposals from the DueDilo vendors for that project. Takes about 2 business days to complete. It's all pretty quick. And then I share the proposals with the client. Let's say they get 10 to 12 proposals. They'll review it. I'll answer any questions they might have, and then they'll tell me, these are the three vendors I want to interview. So then I'll make the introduction to the vendors, and once they interview the vendors, then they figure out who to hire. And that's the typical kind of life cycle of, the client experience.
Right. And do you have any
Yeah.
questions that you suggest that they ask those vendors when they're interviewing the vendors?
Yeah, I think I talked about some of those. Ask about their experience with similar deal sizes, similar industries, their um, drawing a blank. What happens if they find something in the middle of the transaction that's an adverse finding? What happens if you've already paid them? Does that stay as a credit? Did they refund you? What happens there? And do some of your own research online as well. There's this kind of two components to this. There's the qualitative, right? Okay, can this person, or I should say the quantitative, can this person do the job? But then the qualitative, which is like, okay, do I feel good when I'm talking to this person? Like, do they have a good communication style? Do I trust them? Do I have a good gut feeling? It's kind of the same thing whether you're hiring, honestly, a tech support person or mechanic. Like, do they seem trustworthy to you? At Dadilia, we've done the vetting of the quantitative. Can they do the job? Do they have experience with this kind of deal size in the industry? Everything else is really up to the client, and that's going to be different for each client.
Thanks, Roman.
Um, when is a good time to connect um, with the due diligence vendors. So of what part of the process would you start to vet and like put people on your team?
Yeah, so we recommend doing it once an LOI is already in place. And there's a couple of reasons for that. So, first, vendor availability and capacity changes all the time. So you can talk to someone today, but you don't, and you love them, you want to hire them, but you don't have a live deal until 18 months from now. Guess what? They might not be available to help you because their capacity changes. Second, you want to make sure, as we discussed, your vendor has experience with your type of deal, right? Your deal size, and most importantly, your industry. Well, you're really only going to know the details of the business you're diligencing after you have the LOI, right? Like after you kind of make that next step. So one vendor might be better than another. So that's why I recommend for everything outside of legal, start that process once you have an LOI in place. With DueDilo, it just takes a day or two. So it's very quick. It's not something that, I think before DueDilo, yeah, you kind of had to research, okay, who are the people that are doing this type of diligence? How much is it going to cost me? Are they good? Let me look at review. Like we've kind of done all that. So the process is pretty quick with us.
And the response rate from the vendors with you requesting the proposals is, I assume it's probably pretty fast.
Very fast. You honestly, usually within 3 hours, I get
Wow,
proposals. Yeah,
that's crazy.
yeah. We get anywhere from 7 to 12, 5 to 10 new projects weekly. So it's pretty, so there's always activity. So vendors are pretty active.
That's
Yeah.
fantastic.
I know these questions probably have different answers in the US and Canada. So, Roman, we'll start with you. To what extent, and then we go to Liz, to what extent, if any, can DD costs be financed in a deal?
Yeah, they can. Reasonable deal costs can be included in the SBA loan. Yeah.
Okay.
Yeah. Eamon, do you want to take that one?
Um, I mean, money's fungible at the end of the day. So whether it's being used for the equity onto your balance sheet or to go towards fees, it's you can do whatever gymnastics you want to do in your head to say it was paying for fees. At the end of the day, the leverage ratios need to make sense. There's debt to equity ratios, debt service coverage ratios that matter a lot more than what the specific use of the loan is being put towards. So Liz will know I always get a little bit flustered by this question because at the end of the day, the buyer just needs to know how much equity they're putting in total, and that's going to be determined by how much the lender is putting in total, and what that goes towards is completely up to you.
Yeah. The deal structure calculator in Village Wealth can help you model some of your transaction costs. If you get quotes for those, they can be modeled into your free cash flow forecast as well.
And just so everybody knows, at the end of the presentation, well, we have the DueDilo slide here, so everybody has Roman's contact information and all his handles there on the screen right now. And then in a couple of minutes, we'll put back up the Village Wealth one with the 2-week free trial of our platform as well. I know a bunch of you joined after we did that the first time around, so we'll get that out to you in a few minutes also.
Yeah.
Um, do you recommend hiring somebody to represent the buyer in the negotiation of the lease with the landlord?
Well, I would assume that your attorney should take that role. So yes, but that's kind of part of the job.
Part of the lawyer's job. Yeah.
Mhm.
I kind of like this retrade question there, Sarah. That I
Yeah,
see here.
I'm just getting there. I was trying to categorize all the questions there together. So, when does the retrade conversation happen as a result of the Q&E Q of E, the working capital calculation. As this writer is assuming this will happen before this first SPA draft, but can you address that renegotiation?
Yeah, you only have a certain amount of time for the due diligence period, right? Usually 30, 45, 60 days, something like that. So yes, you want to have that conversation as early as possible, as soon as there is a material finding. You want to start having that conversation. Mhm.
Yeah, and I'll add
Well,
on to that too is like you kind of want to stagger the first draft of your purchase agreement so that if there is something that's found in the Q of E and the working capital calculation that you can retrade before starting the work on the SBA because the deal could die before starting the SBA. But there's times, and Eamon, you might be able to chime in on this too, that you're getting pressure from the sell side. We want to see a draft. We want to see a draft of the purchase agreement. And sometimes you kind of have to do that. Well, we'd like to finish this process, or you've done that in the letter of intent stage, is you've kind of prepared them that we're going to finish this stage before we start the next stage so that you can catch anything before overspending on your purchase agreement. So that's my 2 cents on that. Eamon, do you have anything to add from your perspective? Yeah, if you can get clear expectations that the selling party understands that you're going to finish and get the results of the Q&E and the working capital calculation before starting the SBA, that's ideal. But we have seen people where they run ahead of themselves and they start drafting the purchase agreement with the lawyer and they're doing them in tandem. And then
uh,
something gets found and now you've overspent with the lawyer. So you are partially in control of staggering those processes. But like Roman said, there's your time, like the clock is running and
yeah,
days are running out and everything's trying to get done on a tight timeline. So sometimes it's challenging to stagger those.
yeah. I'd say hopefully your advisors are also giving you this feedback. Um, yeah.
And if they meet each other too, like Eamon kind of does coaching and advisory pieces in some of this, but Eamon, you bring your advisors together, right? Like after LOI and do like a group meeting.
Yeah, if the buyer is interested in doing it, some of them don't even want the accountant or whoever to be bothered until a
Mhm.
month down the road. Like, don't start racking up the bill just to have a meet and greet meeting, kind of mentality. Most of these people are professionals and they understand their role in the transaction, and so don't necessarily need to. I guess what I'm saying is I've probably actually reduced the amount of times that I do that now, just knowing that. Uh, the role of each of those advisors is going to be at a specific point in time and for a specific purpose, and so just making sure that they're focused on that and not receiving extraneous communications about things that don't impact them.
Thanks for that.
What are the implications or possibilities of taking a business cross-border that is relocatable?
No idea. I
A
don't
lot,
know.
probably.
Don't
Yeah,
know.
a little outside. That's a lawyer question,
Depends on the
let's say.
business. Depends on the business.
Yeah.
Yeah, different taxes, different regulations, different competitive lands ecosystem. If it is truly kind of remote and you're selling to everywhere in the world, and so your sales tax aren't going to change too much, then it's probably just the corporate tax and regulations you're concerning yourself about, or access to talent. But yeah, probably too many things to get into.
We need to keep a running list of topics here, Sarah, because we can that for that question, we'd want to bring in like a cross-border tax specialist to cover that topic. So we can run a whole session on that one if we want.
Yeah, absolutely. Here's another good one. Are due diligence vendors amenable to back-ending a portion of DD costs contingent on deal closing? Um, if a deal doesn't close, is the buyer on the hook for 100%? Or have we seen any occurrences discounting or crediting a portion toward the next deal, for example?
Yeah, so these are things that you can negotiate with a vendor, and it's really on vendor by vendor basis. Some vendors want the whole fee up front. Some vendors are okay with retainer and then the rest of close. So it really depends. Uh, no vendor is going to work purely on a success fee. So that part I will mention, and I would never recommend you hire someone that works with that type of payment structure because it creates adverse incentives. Obviously, if they only get paid if you close, well, they want to get paid, right? So, to answer your question, yes, there are certain vendors that are okay with you paying a retainer and then the rest upon deal closing. And if the deal doesn't close, then they will simply credit you uh, some portion of the fee. Yeah.
Okay, I think we have time for one more question before that we put, yeah, I think we have time for one more question before we offer everybody up the new or the trial of Village and put that information back up. Are valuations mostly spot on during due diligence? Are there big discrepancies with valuations? A lot of business brokers are not necessarily expert appraisers. What percent of deals would die because of faulty evaluations? My goodness, that is a loaded
Oh,
question for the end,
that's a
isn't
big question.
it?
um, You know what? I don't want to give you a wrong answer. I kind of like to stay in my lane. Maybe Eamon would have a better. He's
You
an
want me to
M&A
say that?
advisor.
I'll say
I will.
okay.
Yeah, all the hard questions. I will
Yeah,
defer to him.
you work with these
I don't
people,
know.
so
I
I
don't
can
know.
be a little bit more transparent. Actually, funny enough, Liz and I just recorded a podcast on this very topic. Will probably come out in the next month or so. Business valuations can be extremely useful. They can provide a lot of good information. They can package it very professionally for a way for a third party to digest, for you as a buyer to digest. So there's certainly value. Do they hit it spot on with the valuation? No. Um, it's very difficult to value a Main Street business because the value is just what somebody's going to pay for it. And that could be very different if it's a strategic buyer versus a financial versus an individual buying. Secondly, the data that they use to build their valuations on is typically very thin. Like if you think about any companies that do a transaction, they're not reporting what EBITDA multiple they did the transaction on to any regulator.
Yeah.
So where they're getting this information, it's probably biased in favor of industries that have significant government regulation and are forced to report, or they're bigger companies, both of which are going to elevate the multiples involved. So you've got potentially biased data, you've got weak comparables. Sometimes you absolutely need a valuation, but the actual highlight dollar value that a company is worth, yeah, I wouldn't say it's too often correct, quote unquote.
Guide. Mhm.
Yeah, it's a good guide.
Good
Use your
guide.
own valuation framework when you're thinking these things through using the information they've collected.
Yeah, and the lenders will have their opinion as well and can sometimes dictate what you're able to pay. Um, Sarah, is my screen up there? Can you see? Am I
Yeah.
sharing it?
It
So,
is.
just to wrap up here today, there is a 2-week free trial for Village Wellth software that includes deal structuring and bankability software, so you can understand if a deal that you are considering is financeable, and it's all in the software. So with that, I will wrap up today. And thank you so much, Roman, for joining us. This has been an absolute delight. And we will share out the recording and Roman slides. We have your permission to share the slides, Roman. So we'll send those
100%.
out. And everyone has Roman's contact information as well. So and is it okay if people reach out to you, I guess I guess you've shared the best methods.
And
You don't have a
anyway,
method
yeah.
anyway.
No,
Seagull,
email is good.
pigeon carrier.
Email is good. Email is good. Yeah, yeah,
And if
All
anybody
right.
wants to reach Village Wealth, if you scan for this 3-week trial and end up on our platform, you can certainly book a consultation with a member of our team as well. And we encourage you to do that if you would like to talk about our services.
Yes. Thank you, Sarah, for that plug as well. And with that, we are at the hour. So everyone have a wonderful weekend, and hopefully we will see you in one of our next Friday sessions.